Grow your money. Investing is one of the most effective ways to build wealth over time. By putting your money into various investment vehicles, you can potentially earn returns that outpace inflation and increase your net worth. Whether you're saving for retirement, a down payment on a house, or simply looking to grow your wealth, investing can help you achieve your financial goals. It's not just about making money, it's about making your money work for you. Money sitting in a bank loses value. While it might feel safe to keep your money in a savings account, the reality is that the interest rates offered by most banks are often lower than the rate of inflation. This means that over time, the purchasing power of your money decreases. In other words, what you can buy with $1 today will be less than what you can buy with that same dollar in the future. Inflation makes it worth less over time. Inflation is the gradual increase in prices of goods and services over time. Even a modest inflation rate can erode the value of your savings if they're not growing at a comparable rate. This is why it's crucial to invest in assets that have the potential to grow faster than inflation. Investing helps your money grow faster than inflation. By investing in stocks, bonds, real estate, or other assets, you can potentially earn returns that exceed the rate of inflation. This means that your money not only retains its value but also grows over time, increasing your purchasing power and helping you achieve your financial goals. You can build wealth for the future. Investing is a powerful tool for building long-term wealth. By consistently investing over time, you can take advantage of compound interest, which is the process of earning interest on your interest. This can lead to exponential growth in your investments, helping you build a substantial nest egg for the future. Investing means buying assets like stocks. When you invest in stocks, you're buying small pieces of ownership in companies. These companies use the capital they raise from selling stocks to grow their businesses, which can lead to increased profits and higher stock prices. Stocks are small pieces of ownership in companies. When you own a stock, you own a share of the company's assets and earnings. This means that as the company grows and becomes more profitable, the value of your stock can increase, providing you with potential capital gains. When companies do well, their stock price goes up. The stock market can be volatile in the short term, but over the long term, it has historically provided strong returns. By investing in a diversified portfolio of stocks, you can benefit from the growth of successful companies and increase your wealth. You make money when you sell your stock at a higher price. This is known as capital appreciation. Additionally, some companies pay dividends, which are a portion of their profits distributed to shareholders. These dividends can provide a steady stream of income, further enhancing the returns on your investment. Investing is a long-term game. It's important to have a long-term perspective when investing. The stock market can be unpredictable in the short term, but over the long term it has consistently provided positive returns. By staying invested and not reacting to short-term market fluctuations, you can take advantage of the market's long-term growth potential. Don't expect to get rich quickly. Investing is not a get-rich-quick scheme. It requires patience, discipline, and a long-term perspective. By staying focused on your financial goals and maintaining a diversified portfolio, you can build wealth over time and achieve financial security. Be patient, stay invested, and let your money compound over time. Compound interest is one of the most powerful forces in investing. By reinvesting your earnings, you can earn interest on your interest, leading to exponential growth in your investments. The key is to start early and stay invested, allowing your money to grow and compound over time. The earlier you start, the more time your money has to grow. Starting early gives your investments more time to compound, which can significantly increase your wealth over the long term. Even small contributions can grow into substantial amounts with enough time and the power of compound interest. So don't wait, start investing today and take control of your financial future. You need a brokerage account to buy and sell stocks. A brokerage is like a store for investments. Many online brokers make it easy to get started. Popular online brokers include Fidelity, Schwab, and TD Ameritrade. These platforms offer research tools, educational resources, and customer support. Choose a broker with low fees and a user-friendly platform. Once you have a brokerage account, you can fund it from your bank account. Then you're ready to start buying stocks. Don't forget to check out the broker's mobile app for on-the-go investing. Stocks represent ownership in individual companies like Apple or Amazon. ETFs are baskets of stocks that track a specific index or sector. Dividends are payments made by companies to their shareholders. Investing in individual stocks can be risky. ETFs offer more diversification, which can reduce risk. Dividends provide a stream of income from your investments. Understand the risks and potential rewards of each investment type. Do your research and invest in companies or ETFs you believe in. Consider your investment goals and risk tolerance. Opening a brokerage account is simple. Choose a broker, provide personal information, and fund your account. You'll need your social security number and bank account details. Most brokers offer online account opening. The process takes minutes. You'll need to answer questions about your investment experience and risk tolerance. Once your account is funded, you can start buying and selling securities. Be sure to familiarize yourself with the platform's features and tools. Don't hesitate to contact customer support if you have any questions. Picking winners in the stock market starts with thorough research and selection. Research is crucial before investing in any stock. You should look at a company's financial health, industry trends, and management team. Use online resources like Yahoo Finance and Morningstar to gather information. Consider factors like revenue growth, profitability, and debt levels. It's also a good idea to read analyst reports and company news. Understand the company's business model and competitive landscape. Don't just follow the crowd. Do your own due diligence and make informed investment decisions. Look for companies with a strong track record and growth potential. Section 6. Smart moves for beginners, diversify and be patient. In this section, we will explore the importance of diversification and the virtue of patience in investing. These two principles are fundamental for anyone looking to build a robust and resilient investment portfolio. Diversification means not putting all your eggs in one basket. By spreading your investments across various asset classes, you can mitigate risks and enhance potential returns. Imagine if one basket falls, you still have other baskets intact. Invest in a mix of stocks, bonds, and other assets. This mix can include domestic and international stocks, government and corporate bonds, real estate, and even commodities like gold. Each asset class behaves differently under various market conditions, providing a balance that can protect your investments. This reduces risk and protects your portfolio. Diversification is a form of risk management that ensures you're not overly exposed to any single investment. It's like having a safety net that cushions the impact of market volatility. Don't panic sell when the market goes down. Market downturns can be stressful, but selling in a panic can lock in losses and derail your long-term investment strategy. Instead, stay calm and remember that market fluctuations are a normal part of investing. Stock market fluctuations are normal. The market goes through cycles of ups and downs, influenced by economic conditions, political events, and investor sentiment. Understanding this can help you stay the course during turbulent times. Stay invested for the long term and ride out the volatility. Historical data shows that the stock market tends to grow over the long term, despite short-term fluctuations. By staying invested, you give your portfolio the opportunity to recover and grow. Time is your friend in investing. The longer you stay invested, the more you can benefit from the power of compounding, where your investment earnings generate their own earnings. This can significantly boost your portfolio's growth over time. Start small and gradually increase your investments over time. You don't need a large sum of money to begin investing. Starting with small, regular contributions can help you build a substantial portfolio over the years. Consider dollar cost averaging, which involves investing a fixed amount at regular intervals. This strategy can help you avoid the pitfalls of trying to time the market and can reduce the impact of market volatility on your investments. This strategy can help you buy more shares when prices are lower. By consistently investing the same amount, you purchase more shares when prices are low and fewer shares when prices are high, potentially lowering your average cost per share over time. This disciplined approach can lead to better long-term returns. Section 7. Watch out. Common investing mistakes. Emotional investing can lead to poor decisions. Don't let fear or greed drive your investment choices. Stick to your plan and avoid making impulsive trades. Chasing hot stocks can be risky. By the time a stock is making headlines, it's often overvalued. Focus on undervalued companies with long-term growth potential. Don't invest money you can't afford to lose. Investing always involves risk. Only invest funds you won't need in the short term. Section 8. You can do it. Take charge of your financial future. It's time to take control and make informed decisions that will benefit you in the long run. Financial independence is not just a dream, it's a goal that you can achieve with the right mindset and tools. Start by understanding your current financial situation. Review your income, expenses, and debts. Create a budget that aligns with your financial goals and stick to it. Remember, every small step you take today will lead to a more secure and prosperous future. Investing can seem daunting, but it's easier than you think. Start small, learn as you go, and don't be afraid to make mistakes. The key is to educate yourself continuously, read books, watch videos, and attend seminars. The more you know, the more confident you'll become in making investment decisions. Remember, every expert was once a beginner. Your journey to financial success starts with the first step, and don't be afraid to ask for help. Seeking advice from financial advisors or joining investment groups can provide valuable insights and support. Surround yourself with people who have similar financial goals and learn from their experiences. Collaboration and shared knowledge can significantly enhance your investment strategies and outcomes. The sooner you start, the better off you'll be. Time is one of the most powerful tools in investing. The earlier you begin, the more time your money has to grow. Even small investments can compound significantly over time. Think of it like planting a tree. The sooner you plant it, the sooner it will grow and bear fruit. Don't wait for the perfect moment. Start now and let time work in your favor. Take control of your financial future. Use technology to your advantage. There are numerous apps and tools available that can help you track your investments, manage your budget, and plan for the future. Staying organized and informed will give you the confidence to make better financial decisions. Remember, it's your future and you have the power to shape it. Investing is one of the best ways to build wealth and achieve your financial goals. Remember to diversify, stay patient, and avoid emotional decisions. Diversification helps spread risk and can lead to more stable returns. Patience is crucial because investing is a long-term game. Avoid making decisions based on short-term market fluctuations. Stay focused on your goals and trust the process. You got this. With a little knowledge and discipline, you can become a successful investor. Set clear goals and create a plan to achieve them. Regularly review and adjust your plan as needed. Stay disciplined and stick to your strategy, even when the market is volatile. Consistency and perseverance are key to long-term success. Start your investing journey today and watch your money grow. Celebrate your milestones and learn from your experiences. Every step you take brings you closer to financial freedom. Believe in yourself and your ability to achieve your financial goals. The journey may be challenging, but the rewards are worth it. Take charge, stay committed, and enjoy the journey to financial success. Section 9. Learn more. Subscribe for investing tips and tricks. Want to learn more about investing and financial strategies? Subscribe to our channel for more helpful tips and insights. Don't miss out on valuable information that can help you grow your wealth. We'll cover topics like advanced investing strategies, market analysis and trends, retirement planning, and much more. Hit the subscribe button and join our community of savvy investors.